Hi everyone, I'm Dropcurb. Welcome to our channel and our latest video when we discuss Nancy Pelosi's investment results compared to the great Warren Buffett. Thanks again for supporting the channel, and it would be great for everyone to like the video and subscribe to the channel. Few names in politics spark as much debate in financial circles as Nancy Pelosi. Not because she runs a hedge fund, but because her household investment returns have reportedly beaten the market by a wide margin. Today we're going to break down how those returns compare to the S&P 500 and the great Warren Buffett, which specific trades get the most attention, and why this has become one of the biggest ethics debates in US politics. Must clarify that this is not financial advice, it's about data, disclosures and context. So, who is actually making the trades? The vast majority of trades attributed to Nancy Pelosi are actually executed by her husband Paul Pelosi, who is a long-time investor and businessman. Under the Stock Act, members of Congress are required to publicly disclose stock transactions made by their spouses. That transparency is why the Pelosi household's trades are far more visible than those of most other wealthy families, and why they've become a lightning rod for scrutiny. How strong are the reported returns? Based on third-party analysis that tracks disclosed trades, the Pelosi household portfolio has shown exceptionally strong cumulative returns, particularly since the mid-2010s. Some estimates suggest roughly 800 to 900% cumulative gains since 2014, compared to about 260 to 300% for the S&P 500 over the same period. Even when compared to Warren Buffett's Berkshire Hathaway, certain shorter time frames show Pelosi's strategy outperforming, though Buffett's true strength remains his long-term, decades-long compounding. The trades that drive most of the returns. A key reason these returns stand out is concentration. The Pelosi seem to trade a small number of large, high-conviction trades, which account for much of the performance. One of the most cited examples would have to be Nvidia. The Pelosi household disclosed purchase of deep in-the-money call options, which is a leveraged bet before and during Nvidia's explosive rise driven by artificial intelligence demand. They've also been in lots of Microsoft and other big tech. Similar option-based exposure appeared in Microsoft, Alphabet, Apple and Broadcom. These companies sit at the center of AI, cloud computing and digital infrastructure, the strongest market theme of the past decade. Visa. Well, this is perhaps the most controversial trade. In 2024, Paul Pelosi and Visa shares sold Visa shares shortly before the US Department of Justice announced an antitrust lawsuit against the company. No wrongdoing was ever proven, but the time had become a central example cited by critics concerned about appearance of conflicts. So why do the Pelosis use options? One reason these trades attract so much attention is the use of call options. Options amplify gains and losses. When they work, returns can look rather extraordinary. When they fail, losses can be severe, but they are capped at the cost of the call premium. This strategy is not typical of most long-term diversified investors, such as Mr. Buffett himself, who generally avoids options and they just prefer to own the outright equity and buy and hold ownership for long periods of time. Legal versus ethical debate. Here's where things often get misunderstood. Legally, there's been no criminal charges against the Pelosis. There's been no SEC or DOJ findings of insider trading. Their trades are disclosed as required by law. Ethically, should powerful lawmakers' families trade individual stocks at all? I mean, that's the question, because if they can't, you eliminate all risk of potential insider trading then. Should options be allowed and available to these people? Does timing near public decisions undermine public trust, even if legal? These questions are why Pelosi's name is frequently referenced in proposals to ban congressional stock trading or require blind trusts. Comparison to Warren Buffett. I mean, as alluded to above, comparing Pelosi's reported returns to Warren Buffett's can be misleading if we ignore context. Buffett's success comes from long-term compounding, conservative leverage, holding companies for decades. The Pelosi household strategy appears more concentrated, option-driven, theme-focused, especially on technology. Short-term outperformance doesn't invalidate Buffett, but it does explain why the comparison gets attention. So, in conclusion, I mean, the story of Nancy Pelosi's investment returns isn't about secret trading algorithms or proven wrongdoing. It's about highly visible, concentrated bets on winning tech trends, the power of options, and the ethical tension between wealth and political power. Whether you see this as a skill, luck, or a reason for reform likely depends on where you stand, but the data itself is real, disclosed, and worth understanding. So again, just to close out, if you found this breakdown useful, please consider liking and subscribing. Let me know in the comments if you'd like a follow-up video mapping these trades directly onto stock price charts or comparing them to other lawmakers or hedge funds. And as ever, please subscribe to our channel. The support is greatly appreciated. Thanks, guys.